Welcome to the Bear Cave interview series. I'm your host, Edwin Dorsey, and our special guest today is Carson Block. Carson runs Muddy Waters Research and is probably the best known activist short seller around. Muddy Waters recently celebrated their 10th anniversary of their first activist short report, and since then they've put out 101 reports. So they're one of the prolific activists out there. I'm really excited to have Carson here today. Carson, how have you been doing?
Jesus, has it been 101 reports?
101, if you include the updates and stuff.
Yeah, no, okay. I guess I'm doing better than I thought. Look, in general, doing all right. The whole, I always qualify that with against this backdrop of a global pandemic, and lots of horrible shit, doing okay.
Well, that's great. One of the first themes I want to talk about is China domiciled US listed companies. And you've written a lot about them. Can you talk about how you first got involved in researching Chinese companies?
Yeah, there's a circuitous story, and I'll try to just narrowly answer your question. But I grew up in the markets, and I had a long side portion of my career in the markets, went to law school, went to China as a lawyer. In the first iteration also, I lived in China in 98, looking to open up an A-share research firm, but realized I was just way too early to find anything investable. So back to the States, banking, law school, and then I was a lawyer in China. I left. I set up the first self-storage company in mainland China called Lovebox Self-Storage. And, every day was basically kind of like a fresh kick in the balls. And I was just, struggling to keep this thing from failing. And my father, who had gotten me interested in investing, and that's, how I grew up in the markets, he got really interested in some of these Chinese companies that had gone public in the US by reverse merger. He'd been to some of the Roth conferences and was really pulled up on some of them. So he asked me to look at one, to diligence it for him, company that was called Orient Paper, ONP. And, I really wasn't interested in doing it. I had a slew of my own day-to-day business problems to deal with, but it was my father. And going into it, my concern wasn't that it could be a fraud, because it just switched auditors to BDO Limited out of Hong Kong for the 2009 year. So, of course, it couldn't get an unqualified opinion if it were a fraud. That's what I thought. So my concern was just, are these guys going to be stealing too much money out of the company? But having no expectation that it was a fraud, started looking at the company with a friend of mine who's a manufacturing expert, and I brought him in as a consultant to help me tour the factory and evaluate the manufacturing capabilities. And we were doing this in the Shanghai airport, waiting for our flight up to Beijing, and we were like, really, literally, we were almost falling out of our chairs laughing at just the obvious lies in the financial statements. So we started thinking, holy shit, like this could be a fraud, right? Some level of fraud. And as soon as we got to the factory the next day, my friend leaned over and whispered to me, he's like, oh my God. It's like, we've got him. It was a joke. It was a Potemkin factory. It was awful. They just reported $103 million in revenue the prior year. And we would later get financial statements from the SAIC in China that showed the revenue had really been about 2.5 million. So anyway, I went back to my father and said, I've never seen anything like this in my life. It's a sure thing that it's a zero. So should we short it? And my father had no interest. He'd never shorted a company in his life. So I was kind of left with this, with no more money in my pocket at that stage, and knowing that this was a fraud. So eventually, just put together this report as a side project. I had no real I don't know, no real idea of why I was doing it other than I was at a point in my life where I felt like I just didn't have anything to lose, and there's a real power in having nothing left to lose. And you just throw the fucking ball down the field as far as you can. And that's what I did. But when I put together this Orient paper report and sent it out, like 50 guys I'd last talked to in the markets 9, 10 years earlier, the report went viral, stock crashed. A lot of people reached out to me and said, this is systemic, take a look at this. And I just started opening 10Ks, and the financial comedy parade just, started. So been doing it for 10 years.
Well, that's incredible. And a lot of people have been focusing more on Chinese domiciled US listed companies with the collapse of Luckin, which you played a role in sharing negative research on them. Right now, there's 137 Chinese ADRs trading on the New York Stock Exchange or NASDAQ. If you had to guess at how widespread this problem is, what percent of those 137 companies do you think have some form of inflated revenue or inflated profits?
I mean, look, and I'm gonna back this up in a second, but I'd say close to all. Here's why. I mean, in economic theory, we talk about the agency problem. In China, the reality is, and look, I asked before I ever started Muddy Waters. I chaired the American Chamber of Commerce in Shanghai's Entrepreneurs Committee. My friends were largely foreign entrepreneurs. Everybody battle scarred. I remember one time coming up on the I think the 2010 Shanghai World Expo, when the Shanghai government was bragging about having spent 50, 60 billion US dollars preparing for it. Went around the table and I said, all right, guys, what do you think the amount of theft, the average amount of theft in a typical project in China funded with other people's money is? And I mean, it was just consensus. 20 to 30% of money is stolen and misallocated. Like it, and people generally qualified it by saying, I think I'm being conservative here or favorable, 20 to 30. So we started throwing that multiple on that 50, 60 million US number and said, yeah, this just put, no wonder the Shanghai government wanted to spend so much money on this. Like it's guys were getting paid like, 9-figure paydays, at the top, 10 figures maybe even. So you start with that issue, that there's no sense of agency in China, that the agency problem is just massive there, number one. Number two, that 20 to 30% also honestly is when I talk to people who are smart money in China, like, VCs, public equity investors. I mean, they're all willing to say, yeah, look, 20, 30% top line revenue fraud. I mean, this is China. Like that's what the game is. And nobody, and then question, well, what does that do to the profits? And it's like, well, I mean, who cares? And so what's real in China when you have other people's money, I believe they think of as 20 to 30% fraudulent. Then you get into that 30 to 50% zone, and it's kind of gray. Like, is this a problem or not? As far as Chinese are concerned, like, does this become unreal? And then north of 50 is when, in general, Chinese will say, yeah, that's a fraud. So I think you could be, up to 50% fraudulent in China on your revenue, and people will give you a pass because there's just so much lying, bullshit, and cheating in the environment. Like reality is just about relative reality. It's not, facts are facts and everything else is a non-fact. It's, whatever we want to be a fact within reason is a fact.
Well, that's great. You recently participated earlier today in an SEC roundtable discussion on Chinese domiciled U.S. listed companies, and you wrote an open letter to Jay Clayton, and we'll have a link in the description, about potential solutions to the problem. What do you think, if you were Jay Clayton, if you were running the SEC, what would you do differently to help solve this issue?
Okay, well, I guess first of all, the SEC, we're talking, what really needs to be done is a policy decision that is above the pay grade of the people at the SEC. I mean, it's up to an administration. And what happens in the, to illustrate that, back when we had the first slew of high profile audit failures of Chinese companies listed in the US, the SEC requested working papers from the PRC affiliates of the Big Four. And the PRC affiliates said, oh, we've been advised that providing working papers on audits of these frauds could constitute violations of the State Secrets Act of China, for which we would be imprisoned. So the SEC sued the Big Four, or the affiliates, in the SEC's administrative court, and the judge ultimately ruled against the auditors and ruled that their practice licenses would be suspended for 6 months. Now that, depending on when that suspension would have started, that could have resulted in at least the commencement of delisting proceedings against a huge number of US listed China companies. Now, that ultimately was greatly softened to a $500,000 fine per auditor. So, a little slap on the wrist. That decision, I'm pretty certain, was made by the Obama administration at high levels. And they said, I think that they probably said, oh, we don't want to, infuriate the Chinese over this. I mean, who fucking cares about these stocks, really? And yeah, so basically we then entered this environment in which auditors over there said, well, no good deed goes unpunished. And if we find fraud in a company where we've already issued an unqualified audit opinion, we're going to be raked over the coals again, and we're probably not going to get off with just a $500,000 fine. So let's take our incompetence and indifference to the next level and just rubber stamp the shit out of these audits. Okay, so the auditors were no longer going to pull the plug. The SEC, without auditors pulling the plug, and the SEC having been greatly frustrated in its enforcement efforts against these guys, because at the end of the day, they'd sit there and basically scratch their balls and say to the SEC, hey, you know what? Why don't I give you like 1% of what I stole? And the SEC is like, well, I guess we'll take it because we've got, like, how else can we even get that? So it was extremely frustrating for the SEC. So then you got into this twilight zone where there's no enforcement, and investors knew this. So your smart money hedge fund said, okay, it's safe to go in the water. They know that these companies are lying about their numbers, but it doesn't matter, because who's going to tell? Like, who's going to put an end to this? It's probably the safest bet on the planet you can make, right? Going along these companies that are just going to perpetually lie about their numbers and show infinite growth. But then Luckin happened, and that was funky. And that was EY basically pulling the plug on that one. Why did EY do that? I don't know. I mean, they'd had a really bad, run of things, with NMC, which we exposed and had already been confirmed to be a fraud by April of this year, when EY gave its findings to the audit committee of Luckin. We beat them up on Burford Capital last year somewhat. I mean, Burford, like, probably on the right side of things legally, but also egregious. EY taking incoming fire on Wirecard. So they, I maybe that's why, EY locally had to act. Maybe it was pressure from the global partners that forced them to actually care a little bit more about their work than they normally would. But in any event, that's what kicked off this whole recent discussion. And I can't tell you how many media interviews I did starting in April where it kind of made me want to scream, because I talked to these reporters and they'd say, oh, like, Luckin, this is a huge story. And I'm like, no, it's not. See, the huge story is how everybody got away with it in the past, and we let them continue to come here and list these pieces of shit, and only now are we realizing it again, and we're acting like we're surprised. Like it never stopped. It's the same thing that happened with the investment banks, right, during the financial crisis. We realized that if traders are sitting there saying, heads I win, tails I don't lose, it can have deleterious effects on the banks, the entire system, and our economy. So we changed that. Well, that's exactly what happens if you're in China. Should I start a fraud and try to list it in the US? Heads I win, tails who gives a shit. So that's where we are.
Carson, one of the companies you mentioned by name in your letter to Jay Clayton was GSX Techedu, an online education company in China. You've published a few reports on them. Citron Research has, Grizzly Research has. It's gotten a lot of attention from the activist community. In a June interview in Bloomberg, you said GSX is a fake company. What do you mean by that, and what's going on at GSX?
So GSX, purportedly an online education company, which, by the way, very competitive space in China, and GSX was not early. Now, we think that at least 80% of its purported users are bots, are fake, and that this is orchestrated by top management. It's not that they don't know about it. So we suspect that, therefore, at least 80% of revenue, but probably more like 90% plus is fake. So that takes us to the scale of like the really old school China frauds where, there's just only a kernel of truth to this whole thing. That's what GSX is. GSX is a hardcore fraud. Now, it's kind of rare that you get multiple, 3 or more activists out on a given name, but that's the case here, and we all agree with each other's conclusions that it's a massive fraud, but it hasn't gone down. I believe, I know where the long term is in this. This thing ends up in the toilet one way or another. Where does it go before getting flushed? That I don't know. It's been frustrating. I know there were a number of people who expected me to, during the SEC roundtable, to bring up GSX specifically. And to them, I want to make a point here that I don't think an activist short seller has participated in an SEC process like that before. And, I thought a lot about whether to get into GSX, and I'm pretty sure the commission's aware of GSX already. And there were numerous comment letters for that roundtable from the public that mentions GSX. I just thought that it would shut down their receptivity to what I was saying if it looked like I was there trying to handle my own personal shit or my own business shit. And I felt like that would be a major strategic mistake. If the overall environment, if there's political will to actually start enforcing more against these companies, then GSX is toast. It's going to be toast at some point regardless. So for people who thought that I let them down, I think you have to be strategic about how to approach this.
So Carson, not only is GSX not going down, it's up almost 100% this month.
Yeah, normal.
Why do you think that is, amid a lot of fraud allegations at all-time highs? Why do you think this is? Do you think there's manipulation? And if there is manipulation in the stock price, do you know how it works or how it generally works with these companies?
So, here's the thing. There's, when a chairman or controlling shareholder or company buys its shares, and is aggressively putting a floor underneath them, we have a temptation to, knee-jerk reaction. Oh, that's manipulation. From a legal standpoint, that's not manipulation. I know that sounds surprising, but if the chairman has a good faith belief that the stock should go higher, and then he's permitted to step into the market and try to push it higher. So it would be so hard to prosecute for manipulation in a situation like that. Now, there could be more going on, and I do want to look at that to see whether there's painting the tape effectively prearranged trading between parties. I don't know. I mean, they're very good at playing the game, these guys. So but this game has to end. I mean, you can have it end two ways. You can have it acquired or collapse. Like, where the fuck are they going to get the money to buy this zero out at these market caps? Like, we saw zeros get funded for management-led buyouts in the first wave, but I mean, we were talking like $700 million. We're not talking 20 billion. So that's a whole different level of being able to sweep these things, or get rid of this thing from public view. So I think I'm confident it eventually goes to collapse. Could it double from here? I mean, yeah, I guess. It's been really frustrating, and you've got to risk manage your positions. We've been hedging it long against the Qs. That's been an inadequate hedge, obviously, and we've had to trim the position repeatedly. It's all you can do, and then we're keeping all this borrow, and when that thing does break, we're going to short the fuck out of it.
Well, that's great. This is just a quick, genuine question I have. Sometimes companies like Luckin and Wirecard, they'll put out a piece of information and the stock will collapse 80% because people, realize the whole thing was maybe a house of cards. Other times, especially with Asian companies, it'll seem like they collapse 80% overnight on like no news. I can't wrap my head around that. Do you understand what's going on in those situations?
So yeah, you look at Hong Kong, and it seems like at least once a week, some company with a market cap north of $1 billion US just falls out of the sky, like down 90% in 20 minutes. What goes on there is, in Hong Kong, there's a tremendous amount of manipulation. And a lot of those companies aren't even necessarily frauds, because their financials don't show any real revenue. But there's that whole safe harbor about, well, we just issued a press release and these are our expectations of what will happen. But those are very small float companies. So the game there is to use that small float and for these guys to trade. So the chairman will usually have what people over there call a manipulation kitchen. And so the manipulation kitchen will just trade these small floats back and forth, get the market cap up to the point where traitorous MSCI adds them to the index. And so now here come Vanguard, BlackRock, and Norges Bank to buy it. These guys smack the bids, and that's how they monetize it. And PS, the chairman, they might keep manipulating it, but then a lot of times the chairman goes and he fucks his manipulation kitchen because he'll pledge his shares without telling them as collateral for a loan. So he's sitting on all this cash. And then he just stops giving them the money to manipulate the stock with. And, the day that the bid dies is when it goes, because there is no other bid other than the manipulation kitchen bids. So that's my understanding of what is happening in Hong Kong, like daily.
Well, that's very informative. So thank you for that. I'd like to know a little bit more about your research process. How do you generally come up with ideas to investigate?
I mean, we're awash in a world of just problematic companies. All right, let's start with first, what we do. I mean, I view our bread and butter nowadays not so much as companies that are, from a legal perspective, committing fraud. Most of them are what you'd call financially engineered. So their financial statements are heavily manipulated, but they're probably just on the right side of the line, or at least it would be a very tough case to bring because the auditors are aware of what they're doing, and they, ran it by their lawyers and came up with a meaningless disclosure that everybody thinks will absolve them of legal liability in the event of, litigation. So that's most of what we do. And again, the world is awash in those. So how do we find them? I mean, a lot of times it's just looking at stuff that seems too good to be true. So when stocks are doing this and people really love them, we'll scratch the surface, start reading transcripts. Does management seem really promotional? Are they using a bunch of buzzwords Do they, announce initiatives and, couple with a lot of fanfare, and then a few quarters later, they don't, those initiatives just disappear from the discourse? Are there certain questions in which which they're evading, on these conference calls, which they're really evading the question and answering with a lot of just jargon and fluff? So those are things that pique our interest. Other times we follow people around, so usually if you've been in shitco world, you're going to stay in shitco world because nobody from real co world wants to hire you. So when we see those people pop up, we take an interest in what they do. A lot of it's also just, talking to people in different markets. And, we might have a conversation which they say, yeah, I had a meeting with this CFO and it was a really, really strange meeting. The guy just, these are things that he said and did, and maybe it's something you'd want to take a look at. So we have everything from that conversation to hedge funds that have done a lot of research and come to us and say, listen, here's all our research, boom, you should take a look. And so it's, we don't run screens much. I know some people who do. I guess my issue with running screens has been that I just feel like you get a lot of false positives and a lot of false negatives, because a lot of times I think when you look at a company to really try to understand what they're doing that could be problematic, you need the context. You need to have an understanding of, okay, what is it that they would try to manipulate? So if there's a company that needs to, it's on the bottom rung of investment grade, it's triple B minus, and it relies on having low funding costs for its business. Well, then knowing that, then you say, okay, these guys are going to manipulate their leverage ratio. So, that means they're going to look for ways to pump up EBITDA and to keep debt off balance sheet. So what would that imply? Or, what, so you have to, that's why I think screens just don't really pick that up for you. But there are people who are successful with them. So I think to each their own.
So Carson, let's say a company piques your interest because someone says, hey, maybe you should look into this. You see a CEO's interview that's kind of odd. What does that first hour of research look like for you? Is there some common red flags you look for at the beginning of your research process? What does that first hour of looking into a company look like?
I mean, well, so it's always with reading the most recent comprehensive filing, so the most recent annual, or sometimes the prospectus, and it's thinking very deeply the whole time about, okay, so this is how they're saying the business works. What what would, if I were in their shoes and I wanted to be aggressive or commit fraud, what would I be doing here? And it's just, the other thing is it's a slow process, because when you get to the things that are really important, for example, risk disclosures are pretty insidious because they throw a bunch of boilerplate at you, and it's just in the way that the securities attorneys write this, I mean, deliberately, is to induce feelings of, of sleepiness and lethargy. And you have to repeatedly stop yourself, reread pages to make sure that you've read closely, because there is often some really interesting stuff buried in the middle of a risk disclosure that's buried in the middle of the risk disclosures. So there's no first hour. It takes, can take a few hours. So that's really what it, I mean, actually, the very first thing I do is pull stuff up on Capital IQ and just kind of look quickly at, what's been going on with the financials, and, can give me an idea of what to be thinking about when I read through, but that takes a few minutes. So the reading, the most recent filing is really where it all begins.
And are there any common red flags you look for an individual investor who wants to see if maybe this company's a fraud should look for? I think some people would say executive resignations. A lot of them is a big red flag. Are there any other ones that come to mind?
No, I mean, look, turnover at the executive level, turnover at the board level, definitely a red flag. But I mean, absence of that does not, is not evidence of absence of problems anyway. But that's one set of red flags. very promotional wording. I did some years ago, and Rackspace wasn't a fraud, but I mean, it felt it was a stock promotion, but I think it was back in 2012. Counted the number of times that Rackspace used the word cloud in its filings between its like its 2010 and 2011 filings, or 11 and 12, and it was like, it's like all of a sudden they did like they literally did a find and replace for servers with cloud. And and the chairman, or the CEO at that time, I saw him actually present live at some Bloomberg conference in Monterey. He got up on stage and he's wearing the Google glasses and he's trying to look like really cool tech guy. They're a fucking, hosting company. And it just seeing that, counting, the number of instances of the word cloud suddenly appearing in the most recent filings, like, all right, this is, that's kind of a flag. I mean, the company didn't collapse, but it did end up having some earnings slowdowns, and then was acquired for premium, because why wouldn't a middling business be acquired for premium these days? So anyhow,
let's move on to Tesla. I don't think you've publicly commented much about Tesla. I don't think you've put out any short reports on them, but they have been a target of a lot of short sellers, and they hurt a lot of short sellers, and the stock seems to keep going up. Do you have any opinion on the company? I don't know if you'd be willing to disclose, but are you shorted currently? What do you think is going on there?
Yeah. So look, I've commented some in the past about it. It's sort of the price. A couple of years ago, when I was really banging the drum on Germany's corruption with respect to Wirecard, and actually it was a year and a half ago, I wrote an article about how Elon Musk should relist Tesla in Germany, where nobody's going to give a shit. And then I went on CNBC to discuss the article, but the price of admission for that was bashing Tesla, and so I said, yeah, I think Tesla could go bankrupt. So that fucking clip like constantly gets replayed. But whatever. So at that time we had a long dated out of the money put position, and what we did, like I never believed in the idea of directionally shorting Tesla, because I remember somebody asking me this when Tesla was $30, like, would you short this? And I said, it's one thing to bet on Elon Musk, but it's another thing to bet against him. I mean, the guy specializes in pulling rabbits out of the hat. I think it's a very dangerous thing. I've said this way back, to be directionally short. But we did what I think was, and in retrospect, I agree, still was a smart way of doing it. I mean, look, I believe at some point this thing implodes. Like, they can't cash flow. At some point, and maybe it'll be in my lifetime, it implodes. So I want to have a free option on its implosion. So our thinking was we could go long the credit. So they had to convert bonds that we went long, and it pays a coupon. And we took the coupon payments, and we were buying long dated, deep out of the money puts. So we were buying long dated crash puts on Tesla. So it was a free option for in case the thing did implode during the length of that trade. We ultimately got out of the trade because we got nervous about the credit, and so we sold the credit, didn't take a hit there, as I recall, and we let the puts burn off. And last summer, the puts were they were getting close to in the money. Yeah. And then how times have changed, right? The world enters a massive crisis. So of course Tesla has to, rocket to 1,500 a share, or wherever it is at the moment. So, look, my issues, and I'm not like, I get on Twitter occasionally and, take jabs at Elon Musk, because, I mean, you can't deny the guy's done amazing things, right? I mean, yes, and and I watched that SpaceX, and I was rooting for that SpaceX, and I thought it was so cool looking at those screens in the capsule, and just no switches, dials, and knobs, and it's a great place to watch movies and shit while you're orbiting the Earth. you have to really hand it to him in some respects. But that's why it's so bothersome to me that he just lies so goddamned much. Like, why? You will win any like contest of inches, man. Like, if we want to put them on the table, like, you win. You don't have to lie. And so that part, and then his attacking critics, and like one of the things that I feel is just central to the world's dysfunction at this point is what I've called a global war against truth. Truth is uncomfortable. It's uncomfortable to the German establishment. It's uncomfortable to the current president. It's uncomfortable to Elon Musk. And so whenever people in positions of power are seeking to discredit their critics and demonize the media and man, it fucking pisses me off. So Elon's not only a liar, but then he demonizes the people who are telling the truth. And it's just sad because he doesn't need to do this. Like, he is in the humanity all-time Hall of fucking Fame without telling a single lie. Why do this? That's what I really don't understand.
Fair enough. I pulled the Twitter universe for some questions that people on Twitter had for you in this interview, and I'd just like to ask a few that were submitted by Twitter users. One person asked, what's the longest you've ever maintained a short position, and when do you decide to give up?
Oh boy, longest ever maintained a short position. Probably about a year. I mean, our business as an activist short seller is, so the traditional short sellers, they take a position because they think the catalyst is just around the corner. Um, and in this age of massive monetary stimulus, post global financial crisis, they've been right in the theses, they've been just wrong about the timing. As activist short sellers, we anticipate a catalyst. Okay, we're hoping that the information that we release will catalyze revaluation. But a lot of times, I mean, you get to a point where you feel like, okay, as an activist, this has run its course. I can't say anything more. I'm not going to change anybody else's minds here. And so, so I think when we're successful as short activists, it happens within several months. Like, you're either you either make your money or you don't within that period. So a year is probably the longest that we've held a position. Now we're launching a new fund, and the covering decisions are going to be decided in this new fund by artificial intelligence that we've created, because we obviously know when to open the positions. But the thing is that's hard about our situation as short activists is when we succeed, it's because we create an environment that's so highly pressurized on the company that things inside start to break. But we can't see those things from the outside because we have no company access. And of course, the company's trying to cover it up. So things that could be breaking are internally, senior managers say, listen, I'm not going to be doing this anymore. Like, you want somebody who's going to do X, Y, Z, like, I'm out the door. So you can get company, internally, they just decide not to be so aggressive with the things that they had been aggressive with previously. Or senior people leave, or directors resign, or the auditor isn't going to issue an unqualified opinion. Or there are lots of things that could happen, but we just don't see from the outside. So the idea is humans. So the idea was to create a system that could look for signal in the noise and determine when it is unlike, or so the question that it answers is, will continuing to hold this short position likely result in negative incremental alpha? And so when it does, then we're planning on closing out the positions.
Another Twitter user asked, are there any examples of shorts that you weren't sure of, but you were almost convinced? Like, you thought you were close to nailing them, but you weren't 100% sure. that got away? And what was the thing that hesitated you from pulling the trigger?
Okay, I mean, there are a few things that I think are, fall into kind of into that category. Let's talk about New Oriental Education, which we shorted in 2012, EDU. Now, it's a real business. We always knew it was a real business. We released a recording of the CFO lying 5 times, I think, saying they don't have any franchises, any cooperative arrangements. They 100% own every store. But the funny thing is, simultaneously, we had a guy in China who was negotiating with them to become a franchisee. So we knew they franchised stores. And so we also knew that the financials were not accurate to some extent. And we felt that they were much less profitable than they claimed. Now, we put out our first report at the same time, right around the same time they announced that the SEC had been investigating them. So we got, actually kind of lucky there. But the thing is, we had a guy in China who then was intercepted by the Ministry of State Security. And he was put through the ringer, and his family was put through the ringer. He could, I mean, like it was traumatic for him. And it fucked me up so badly in the head at the time because I was so worried about this guy that we took our foot off the throat of EDU. I think at that point in time, in 2012, 2013, before everybody's memories had been wiped about the problems with China companies, if we had kept up our campaign on EDU, I don't think it would have rebounded as quickly, as much. I don't know. I mean, today it could very well be at the same market cap because there was this massive memory wipe that occurred. But that's one that we let get away because there were other considerations there, and I was just distracted, and I just couldn't write the follow-ups, to be totally honest. We now have we've shut down our San Francisco office, but it's in storage. But we have a huge poster. So they made a movie in China about the founder of New Oriental Education, Yu Minhong, or Michael Yu. So we have a huge version of that movie poster in our wall to kind of remind us that, maybe through no credit to him, but more credit to his country's security services, he kicked our ass. He won. So that's one. Another is American Tower. I mean, that was some of the best research we ever did. And we found one transaction in Brazil, $250 million that looks like it went missing or was misreported. We screwed up the messaging on that. There was a problem with the report leaking ahead of time. So we were massively front run in the options market, which impacted the day one movement. And here's the reality of life as a short activist. If you don't get a strong day one movement, then the company is not going to feel pressure. And shareholders are going to say, whew, that's close. All right, I guess there's no problem. So you need a strong day one move in order to knock down these dominoes and make sure that that company ends up feeling the pressure. So with AMT, because of the front running for technical reasons, there was no day one drop. It was a glancing blow. But that was great research that we did. You look at TAL Education. I mean, we called it a real company with fake financials. Profits that they've reported in the past are fake. Things a rocket ship. So I think that's really beta and China general bullishness. But yeah, those are the ones that come to mind.
Here's another Twitter question that I found interesting. Do you have any thoughts on how to bring accountability to the practice of hiring black hat security firms to harass or intimidate people seeking to expose fraud or short sellers, or the tactics of maybe lawyers who like actively engage to try to suppress the truth? And this is, I think, extra relevant for you because I think you had a scenario where some security firm guy impersonated a reporter and tried to get info from you. So just curious on your thoughts on this.
Okay, I mean, they're two different categories, right? I mean, although the answer to both is not much you can do here. So in terms of hackers, yeah, I mean, we deal with them all the time. I shouldn't say we deal with them all the time, but sorry, we think about that threat all the time. So we apparently, it was reported by Reuters that we were also on that target list of the Indian company Beltrox, where Wirecard might have been the ultimate client there. I mean, we were, not really ever short. I mean, we were short Wirecard for a moment in time, and haven't made substantive comments on its financials. Uh, but they were pretty vindictive guys, so I guess they could have been the client there or somebody else. Yeah, you just got to be careful. I mean, we change our machines out pretty frequently. The hard part is the hard part is when we decided to start managing outside capital and become SEC registered, because there's a books and records requirement that you keep books and records for 7 years. And it's actually kind of vague. We had this discussion with counsel back then, say, well, listen, what if we, obviously all client communications need to be kept. They're worried that you're misrepresenting things to clients. Trading instructions need to be kept. But we were saying, we were worried or we're concerned that our upcoming research process or reports could be compromised. What if we maintained a separate system, wasn't networked? We got rid of the domains all the time. That's how we used to do it back in the day. Every company had a new domain. Every project had a new domain, for the email and file sharing. It's on a different server. And there was the argument that, yeah, you can make an argument that's outside of the books and records requirement. Conservative view is it's within. And I said, we get we're short sellers. People get so pissed off at us for so many things that I'd rather just play it conservatively. But yeah, I mean, I'd say so that's made it harder, is managing outside capital on the security front. I mean, we work very hard on it. We do the best we can, but at the end of the day, I mean, state sponsored hackers apparently have a 90 some odd percent success rate in penetrating networks. So if it's the guys, playing for China, I don't know. I mean, it is what it is. That's number one. Number two, the lawyers. I mean, one thing you have to understand about the United States of America is that it's pretty much run by lawyers. I mean, former lawyers, right? Almost every person in Congress is a former lawyer. Every person on a commission that is part of the executive branch is a former lawyer. They tend to write laws and regulations in ways that protect lawyers from being held liable and being held accountable for stuff. In court cases, I mean, in theory, you can move for sanctions against opposing counsel, but I mean, they pretty much have to, choke somebody out in the courtroom to get sanctioned. So there's not a lot you can do there. I mean, and I thought it was funny, that PPP list came out, and I think, so please confirm this, but anybody who's interested in this, please confirm this. But I think Kasowitz, Benson, and Torres took PPP money, and those guys are basically, I'd say, the most aggressive in representing plaintiffs suing critics and short sellers. So I think that's kind of funny. Another one that I think did also take PPP money is Cobra and Kim, which that always cracks me up because, I mean, maybe too young for you, but I'm like, wait, wasn't that Ralph Macchio's arch enemy in The Karate Kid? Those guys, I mean, they are pretty much assholes like the, those dudes were. But yeah, there's not much you can do. They just got to move to dismiss. And the thing that sucks about being an activist short seller in those settings is, I mean, I view, and I think a lot of reporters would get pissed off if I say this, but I view what we do as activist short sellers as media, as reporting, journalistic endeavor, but with a different business model. And the issue is there isn't a business model that supports long form investigative journalism. I mean, companies, large news organizations do those basically as loss leaders. And certainly when they investigate, I mean, they can't spend the money that we spend and bring the resources to bear. Now, they have other advantages that we don't have, but net net, I think we're close cousins, if not really the same thing. But if I hadn't shorted the stock and I moved to dismiss a complaint and said, look, I'm an independent reporter, or, we're a news organization, this was in the public interest, we would get those dismissals sooner than we do sooner than we do because we've shorted the stock. Because even for a lot of judges, there's a presumption that you're doing something underhanded when you're betting against these guys. So, yeah, I mean, but based at the end of the day, though, these lawsuits rarely go anywhere. And you just have to, it's a cost of doing business. I mean, if you're going to be an activist short seller, just assume, one out of every blah companies will sue, and it's going to cost you, blah to deal with the bullshit. And I mean, worse than the money, I'd say, is just the amount of time. Like it's a real bitch to deal with these things. But it is what it is. I mean, if you can't deal with that, then, this is not the profession for you.
So Carson, a lot of people read what you write. I think you have over 100,000 Twitter followers. You're prolific. What do you like to read? Are there activists you like in particular, journalists you like in particular, journals you like? Like, what do you like to read?
Oh my God, that's no. I groan because look. I do this in part because I really want to know how the sausage is made. And so anything that catches my eye that delves into how the sausage is made, like I will read that. But there's a problem, whether that's on Twitter or in the Financial Times. The problem with that is, and I'm fond of saying this. So what I used to say about our business, and I really, I started saying this a few years ago when we, with one particular short. I very seldom leave the office feeling like the world is in a better place than I thought it was when I started my day. Most of what I do will convince me that we're, more fucked up than I already thought. And so I do tend to gravitate towards those kinds of stories. It exacts a psychological toll, though. I mean, that's the reality, and there's also, I mean, one of the other problems is that I've made good money over the years by having this very skeptical filter. And I'm aware that from time to time I need to impose corrections on it because it's, I've just been, I mean, it's like I've been, neurochemically and financially rewarded for finding really bad shit. And sometimes I have to say, listen, maybe it's not as bad as you're thinking. Like, step back, look at it from alternative perspectives, and see if things aren't as bad. But yeah, I mean, particularly when we're in this coronavirus crisis, I mean, I spend a lot of time in that space, and it's not healthy. I mean, it sucks. Like, there are times when I'm bringing that. Probably a lot of evenings I've brought that heaviness to the dinner table, and yeah, it sucks for my family. It's not right. So I unfortunately, the short answer to your question is I unfortunately spend a lot of time reading stuff that is just really, whether it's about major issues or even minor esoteric things, just really exposing dysfunction. And I don't recommend people do that. It's the bottom line. Don't be like me in that regard.
Well, Carson, I got one final question for you. It's a Twitter question. You might have just answered it with your last answer, but what's the hardest thing about being Carson Block?
Um, okay. I mean, I don't know what the hardest thing is, and let's be honest. I'm doing far better than, like vast majority of people in this world are. Um, I'd say one thing that's always a little bit, is always a little bit tough is when I meet people, if people have heard of me, there's that old saying, you don't want to meet your heroes. And it's just a lot of times I meet people and I could tell like they kind of put me on a pedestal and then they start asking, what do you think of this? What do you think of that? And like, I don't know, and I'm just a guy like I try to balance what I do professionally with my family time, and then just time to unplug and just, go numb. So I'm not an expert on all this shit. Like I can tell you about the things that I focus on. So I guess that's one thing where it's like, you just feel like, you will like if people hang out with you for people like that hang out with me for an extended period of time, they're going to be disappointed. You know what I mean? And that's just kind of, look, that's not the worst thing in the world because, a lot of people never get kind of put on a pedestal to begin with, but, I don't know. I'd say maybe that's the weirdest thing. So when I'm in those social situations and I'm supposed to be on, it's exhausting. Like to be on. I'd say this is the hardest part. Sorry to make this much longer answer than it probably deserves to be, but this is really what it is. When I talk to people whom I don't know or don't know well, I have to constantly be assessing who is this person, what might they really know about me, what might their real intentions be, how could they hurt me, and my family. And I have to go through that list. Whether I'm at a function at my kid's school, or I'm invited to some conference and I'm networking there, and it's fucking exhausting because then you get through all of that, and then you have to kind of act like people expect you to act to some extent. And so I'd say that's the hardest part. And look, I'd much rather have that lot in life than what a lot of people go through. So don't shed tears or pull out a violin. I get it. I still have a Porsche. But that's probably the part that I struggle with the most.
Well, Carson, thank you so much for doing this. I really enjoyed it. Any final thoughts, last closing statement, anything else you wish I asked?
No, we're good, man. That was a good one. Thank you, Edwin. Appreciate it.
No, thanks so much for doing this, Carson. And if you're new to Muddy Waters, you can just find all the research on Muddy Waters, muddywatersresearch.com. Link will be in the description. Thanks again for doing this, Carson.
All right. Thank you.